Debits and credits are a fundamental accounting concept, but they're often one of the most challenging topics for accounting students to master. I'll help you understand them using a simple three-step process. In accounting, every transaction has at least one debit and one credit, and that is why we refer to it as double entry bookkeeping. Debits and credits are used to record financial transactions in a company's books. A debit is an entry that is made on the left side of a ledger account, and a credit is an entry made on the right side. Debits and credits do not have a fixed meaning, and the effect of a debit or credit on an account depends on the type of account. The easiest way to understand this is to use this three-step process. Step 1, identify which accounts increased or decreased. Step 2, identify the account category for the accounts from step 1. Step 3, use the dealer mnemonic. Let's practice these 3 steps with 2 examples. Maple Street Bakery buys equipment for $2,000 with a check. In step 1, the accountant analyzes the transaction and determines which accounts increased or decreased. In this example, the company now has more equipment, but it also has less cash because the company bought the equipment with the check. So equipment increased and cash decreased. In step 2, the accountant determines the account category for the accounts that increased or decreased in step 1. In our example, we have equipment, which is an asset, and cash, which is also an asset. For step 3, we use the dealer mnemonic. The first 3 letters, drawing, expenses, and assets, refer to accounts that increase with debits and have a normal debit balance. The last 3 letters, liabilities, equity, and revenue, represent accounts that increase with credits. Now for our example for Maple Street Bakery that purchased equipment for $2,000. In step 1, we determined that equipment increased. In step 2, we established that equipment is an asset. And since assets are on the left side of the dealer graph and assets increase with debits, we need to debit equipment. The second part of our transaction is a decrease in cash. In step 2, we said that cash is an asset. The dealer mnemonic tells us that assets increase with debits, but in this case, cash decreased. Since a decrease in an asset requires a credit, we need to credit cash. And there you have it. We record this transaction in the company's books with a debit to equipment and a credit to cash. Let's practice with another example. Maple Street Bakery sells pastries and cakes to a business customer for $350 and receives $350 in cash. In step 1, we determine what accounts increased or decreased, and in our example, Maple Street Bakery now has more cash, so cash increased, sales also increased. In step 2, we determine the account categories the accounts in step 1 belong into. Cash is an asset and sales belong in a revenue account. In step 3, we use the dealer mnemonic. Cash increased, cash is an asset, and assets increase with debits, so debit cash. Sales also increased. Sales are a revenue account on the right side of the dealer graph, and revenue accounts increase with credits, so we credit sales. And that's how we record this transaction for Maple Street Bakery. Debit cash and credit sales. Follow these 3 steps and debits and credits become much easier.